Hey there, it's Casey Dimon here, TaxSaleAcademy.com, and welcome to our weekly tax sale question segment. This week's question comes to us from one of our YouTube subscribers. It says, Casey, I've seen just about all of your videos. Spot on with this information. Quick question. I'm looking to start investing in vacant lots. Do I still need to clear the deed before selling? Thank you in advance. So this is a fantastic question. Let's start with a little bit of the backstory for those not familiar with what this question even refers to. So when most properties are sold on the conventional market, when you see a realtor sign out front, for example, they're going to be sold with something called title insurance. This is an insurance policy issued to the buyer that insures that buyer against loss due to error or issues in the chain of title. So in the most simplistic example, this ensures that the buyer of that property does not have to pay off a lien or a mortgage or anything like that they didn't know about 5-10 years down the road. They don't want to get stuck with somebody else's debt. So basically, a title company will perform research on the property called a title search, and they'll look up all the history of the property, liens, mortgages, releases, deeds, all that good stuff. They analyze the risk. They say these situations need to be taken care of, like the mortgage has to be paid off. And then once that happens, at closing, they will issue title insurance against that property. Now, when it comes to a tax foreclosed property, you're dealing with a governmental process that allows the transfer of ownership without the seller signing anything. The state statutes also have very strict guidelines that must be followed by the county. Now, because of those issues and a few others, title insurance companies, who are private companies and analyze their own risk tolerances, usually will not provide title insurance on tax foreclosed properties. This means if you take those properties and try to sell them on the open market, on the secondary market, number one, you probably aren't going to find a whole lot of buyers. But number two, if you do, it'll likely be to an investor, and it's going to be a discount below its full market value, which, by the way, is not a horrible strategy because it allows you to roll properties pretty quickly. But again, a tax foreclosed property with title clouds on the secondary market is not going to get you full market value. So you have to clear those title clouds through a number of different methods, which I have other videos on. So understand that. You have a clouded title, and without clearing the title, you won't get full market value. So let's get back to today's question now that you're up to date. Do you need to clear titles on vacant land prior to selling? So it's very important that you understand that when you buy real estate, you are buying the legally described real estate, and whatever is permanently attached to it, typically identified with a survey that shows a house on that legally described real estate or a building or whatever else. So if I am in two separate transactions and I buy a house right here and directly next door to it, I buy a vacant lot. Again, two transactions. Unless you knew all the details or you knew the price, you probably would not be able to tell the two transactions apart simply by looking at the deed and title insurance. Those documents don't say this one's vacant, this one has a 2,000 square foot house on it. Instead, they simply say the legal description, XYZ subdivision, lot number 1, XYZ subdivision, lot number 2. So again, the title insurance is issued on the legally described real estate and anything permanently attached to it if that applies. So whether it's a vacant piece of real estate or it's developed with a house, that's mostly irrelevant outside of the fact that it could impact the price, which ultimately impacts the cost and the value of that title insurance. But when it comes to the title policy itself, it doesn't really matter. They're not insuring the house, they're insuring the legally described real estate. So to bring this full circle, whether your property has a house or a vacant lot makes zero difference. In order to sell it at full market value, you're going to need to be able to provide title insurance, which means you'll have to clear the title to that property or go through the tax foreclosure certification process, which I have other videos on as well. Now, obviously, if the property is worth $1,000, then it might be cost prohibited, whether it's a vacant lot or there's some sort of dilapidated house on it. So keep that in mind as well. But to get full market value, you need to clear the title, whether it's a house or a vacant lot. And again, it goes back to what I was saying earlier. If it's a very, very cheap property like that $1,000 house or $1,000 lot, you can always sell it with an as-is title. Just don't expect to get full market value. So hopefully this has helped answer your question. For more information on tax sale investing, make sure you check all the links in today's video description, including the one to our primary site where we offer the most comprehensive step-by-step tax sale training at TaxSaleAcademy.com. Hey, take care and make it a successful day. See ya.